All right, everyone. Thanks for joining us again on the Integrating Investor. I hope you all had a great holiday weekend. To everyone in the world. Now, I know you in the UK, you can't be that bitter because even though the US succeeded, it was a moral revolution, right? And really helped kick off or at least accelerate the enlightenment that we're all enjoying today. Just a note here, I have a fantastic guest today. I'm joined by Daniel Want. Daniel Want, and it's going to be a great interview. Daniel is one of my favorite thinkers in the investment space, and consistent with with the philosophy of the show here, which is really getting into investment frameworks. Daniel has a real interesting approach to markets. I think will really resonate with people on the show. It certainly resonates with me. And again, we're not talking about philosophy here, but we're trying to apply kind of an implicit framework here, and here I think a familiar one, an implicit method for thinking towards investing. And just a note, we are recording the show. This will not be live. We're recording on July 7th here in New York. But Daniel is gracious enough to answer any questions you have. So please, use that chat because we will be able to kind of circle up afterwards and answer any of those questions. As always, please like, share, get the word out on the show. It's always a help and always appreciated. Maybe just hit that like button right now. If you're a little out of practice, you hit it now. And then, if it stinks because I'm interrupting Daniel too much and you just can't get enough wisdom out of it, unlike it later, or, thumbs down or whatever, right? You can follow me on Twitter. Check out the website, subscribe to get all the monthly emails just sent directly to you when they come out. And of course, please use that super chat function because again, we will be addressing those even though we are not live. And as always, if you have any comments or any topics or guest suggestions, email me at info@integratinginvestor.com. That's info@integratinginvestor.com, or leave a note in the comment section, and I'll definitely check that out. So without further ado, everyone, my favorite part of the show where we throw up the disclaimer. And again, these are just personal opinions. It's not investment advice, information purposes only. Nothing that I say or what Daniel says in particular should be taken as investment advice. You guys all know the drill. Nothing new or earth-shattering here. So moving on, right? Today, we are joined by Daniel Want. Daniel is the Chief Investment Officer and co-founder of Prerequisite Capital Management, which is an Australian investment manager. He heads the investment team there and is primarily responsible for research, consulting, and investment management activities. Before founding or co-founding Prerequisite, Daniel was an investment strategist for an award-winning Australian hedge fund. He was a portfolio manager and financial analyst for an Australian stock exchange-listed financial services company. And probably most interesting to me is he's self-educated. He actually made the bold move to teach himself and drop out of university. And he studied investment management, complex systems analysis and problem solving, leadership, psychology, and business, really from a bunch of mentors that he tracked down, and just a slew of books that came his way. And this independence and really courage, I think, shines through in all of Daniel's work, and is something that I really enjoy and respect. Daniel's done many prestigious interviews. You may have seen him on the podcast circuit, including for Real Vision, which viewers know I'm a big fan of. But above all, I mean, he's probably my favorite, among my favorite investment market thinkers out there. And you'll see it come through in our interview where he thinks in principles, right? And he has a real fidelity to data and a willingness to really rethink all his fundamental concepts. And both are really rare and something that, I hope to emulate here. And probably above all, he's been, I know I've said that a couple of times already, but just goes to show you my opinions. But just Daniel's been incredibly generous with me, and he's been a great mentor and, a friend from afar. And I'm just so excited, to bring him onto our show and to introduce him to all of you. So, with that, Daniel, welcome to the show.
Hey, nice to be here.
Yeah, thanks. So, I always kick off I always kick off my interviews with a background question. I think it's always interesting. It helps sets the context. What was your path, to where you are now, and how did it really shape, how did your past shape your thinking, today?
Um, so yeah, one way you can look at it is my past was all about my thinking and trying to think better and trying to understand things a little bit more clearly in a way that made sense to me, that seemed um, a little bit more honoring to the integrity of reasonable first principles and assumptions as opposed to ridiculous ones that I found we were being instructed in at university in particular when I went there. And so it's basically been a progression, and one of the key sort of lessons or the key features of that pathway is that reasonably early on, I started to realize that just like a fish doesn't know that water exists until it's out of it, you don't really understand the paradigm you're in until you've gone into a few different, completely uh, different paradigms. Because once you've stepped out of the paradigm that you're in, which is typically the more conventional sort of progression of things, depending on your pathway, and go very deeply into a variety of others, you don't have that ability to compare and contrast and get the clarity you need to understand what is actually going on in the world. And it's that multitude of perspectives that allow you to sort of glimpse or get different glimpses of underlying reality. And when the same picture is emerging, that builds conviction that you're actually on top of things,
Yeah.
especially if you've got that coherency and explanatory power, and sort of historic robustness, et cetera, et cetera.
Yeah,
And so the
totally. I
pathway has
mean,
just been trying to pursue that sort of dynamic in different evolutions, so to speak.
yeah, that's like that's interesting because the way how I think about thinking is really, you have to get all this data, right? And then you get the data and you see what's the same and what's different, and that sort of combination of comparing all the data is how you kind of form concepts and new ideas and things like that. So like getting different perspectives, as you mentioned, is a way to really build knowledge, right? A fish doesn't realize he's out of water because he doesn't have the data of anything but the water, right? It's really fascinating. I guess what kind of paradigms, if you want to call it, or experiences really helped shaped how you're thinking, and I guess where do you even, if you can even pinpoint how you even came up with that framework of realizing that you needed to see different things, because it's not one that's taught, right? It's not common. Like most of us just kind of do what we're told, kind of continue down the path that we're on until something kind of kicks us off it. So I don't know.
Yeah.
Yeah.
So back at university, I did the majority of the finance major, and it was getting into economics, and it was getting into the economic side of things that uh, really started my head spinning, quite frankly,
Mm.
because they were in teaching us the beginnings of the economic sort of subjects. They would ridicule the assumptions that most of, at least economics at the time, back then, and it really hasn't
Mm.
evolved too much, were predicated upon. And so they'd go from making jokes of their own sort of starting assumption set to then, as the subjects sort of advanced and they'd start constructing all these big, elegant theories, it'd shift from ridiculing the assumptions to almost a form of religious belief in these big theoretical frameworks, trying to explain uh, the economy or the economic system, but still predicated on these sort of detached assumptions or ridiculous assumptions, which was the only way they could sort of make these theories work and hold together. Whereas at the same time, I was doing a lot of reading, and I was pretty motivated to try and figure out how the world worked, basically. And I was stumbling into sort of more like systems theory, trying to understand the world as a living ecological system, like as a complex adaptive system, and
Sure.
all of this sort of thing. And I started to realize what we're being taught in university was really, the way economics has evolved, the theory set is very noticeably, well, they call it physics envy, basically.
Yeah.
So because when we study economic systems or the world with people in it, all of a sudden the relationships, everything sort of changes. It's the old saying that what would happen to the laws of physics if neutrons could think, and the like, right? And so
Totally.
it's a materially different system that we're studying, and because of that behavioral element that gets injected, 1+1, sometimes it equals 2. Most of the time it'll equal 2, but sometimes in our social systems, 1+1 can equal 4 or -1, depending on feedback loops and depending on different behavioral dynamics or a whole variety of influences.
Yeah.
And so obviously back then I couldn't sort of articulate this, but this was what I was starting to realize, is that the world we were living in and then trying to wrestle with from a markets perspective and trying to anticipate this economic and financial market sort of constructive system, it was very complex in nature. And it had this living ecological type characteristics to it, where you had feedback loops and you had all of these different dynamics. Relationships were not stagnant. They can intermittently change in their dimensions and all sorts of dynamics. Whereas what we were learning at university was basically the world as a mechanical system, right? As a very linear, very, relationships are very stagnant. And so I was starting to realize the contrast here.
Yeah.
And when I'd read some of the old school sort of greats throughout history that had been successful in either anticipating stuff or understanding things, I'm realizing that implicitly they had more of a systems perspective of how things work. Everything's interconnected, interrelated, and they would spend a lot of time trying to understand those sorts of relationships, and a lot of market trends and economic trends are usually a function of an underlying feedback loop that had sort of arisen and formed. And so I was starting to see all of this. And then at the same time, I was sort of trying to learn about, well, how do you walk into any business and grow it and then sustain that growth, etc. And so I was learning not just about psychology at a larger level, but also at the individual and sort of organizational level as well, and behavior and how businesses function and how society and how the world works, and seeing disconnects there as well, and starting to, on the one hand, be really fascinated with all of this stuff, but on the other hand, really scratching my head with what we're being taught. And then every time I'd go and ask questions of lecturers or tutors or whatever, pretty quickly I realized that they weren't not necessarily interested in trying to figure out how things actually work. They're just, they have this theory set. This is how it is. You're just going to memorize this. Don't worry about the fact that it traces back to ridiculous assumptions. Don't worry about the fact that it really only applies to Mars or some other planet with non-thinking participants and whatever. And they were getting angry. Like if I pushed this too much, and that really surprised me. Now, I was young and naive, but when I would have thought, well, okay, if we understand that this is not that great, let's try and figure out what is a more accurate starting point by way of assumptions, and then the knock-on sort of constructs from there. But that wasn't met, in the way I thought it would be.
Yeah, I mean, I still get stumped when I come across that too, where someone's got a belief and you challenge the belief because you think the evidence suggests otherwise, and you just get pushed back the whole time. Like, oh well, there's just kind of people.
I got
just
a crash course thereafter in people and how they construct identity and their meaning and purpose and all the rest of it. And it's not kind of nice to think that, you know, you've dedicated decades in some cases of your life to teaching stuff that's not that helpful. In fact, is, you know, in economics, I'd argue is like strapping some bags of cement to these young kids' backs and saying, go out there and swim, you know, because you've kind of got to.
First, you got to cut the bags off.
Yeah, that's
Right.
not easy to do. And
No.
that was actually what scared me the most is, you know, I'd come home on, I'd be back at Christmas on holiday or something, and I'd be trying to figure something out and like about the world or something. I realized I had these funny blinkers on in my mind, in my thinking, and I was starting to, it's almost like some sort of osmosis thing. You just start to think like that culture
Yeah.
and environment of thinking, and that was really scaring me, because and that ultimately was the straw that broke the camel's back, where I was like, I just got to get out of here. It's not healthy. I don't want to. I thought I could do a better job educating myself than they could, so that's it. See you later.
Well,
Applied to university and just went for it, which was, you know, not something I'd recommend really, but you get pretty motivated when you burn bridges.
Yeah, I mean, I'd say looking back in hindsight, I mean, that was maybe the best decision of your life, right? You know, it's hard to probably see it then, but there's a real kind of, again, this is the theme, just like a fidelity to the truth, right? Not necessarily what, you know, we'll say, or let's just say the data, right? Because truth can get a little tricky, but just fidelity to what you're seeing in your analysis of the world, and like sticking with that and having the confidence to do it. And I think it's awesome. You know, I don't think I would have had the ability to do it. And I really admire kind of that, you know, that your courage, right? And I've been reading your work for a while, Daniel, and I absolutely love it. And you know, one thing that I noticed is you have this, especially in investing, where especially now it's very empirical based, which I think is very good and very healthy. But you know, one thing that you do is you have this unique framework that's really built on both, you know, you mentioned it before, kind of principles and thinking, and sort of systems thinking. And you know, those are very rare these days. And I think you bring a whole different approach to problem solvings and investing. And kind of curious, like, how did you come up with that approach? You know, the introduction into systems thinking and kind of into and develop these principles that you invest on. I guess why principles even to begin with, right? Why not just do kind of, you know, be a value, you know, say you're a value investor and kind of value invest?
Well, originally I was trying to figure out how the world worked, but being you know, young and naive, and I didn't even know how the concept popped into my head. But so the guiding concept, when I quit uni, I wanted to figure out how the world worked and how to operate in it, especially from a markets perspective. But, and this is where I don't know how this actually arose, but in a way that was liquidity unconstrained.
Sorry about that, everyone. We had some technical difficulties, but we are back with Daniel Want, and we're just going to get right back into it. So, Daniel, really, you know, you have such a unique framework that's kind of based in both principles and systems thinking. You know, as you noted, you know, this wasn't taught in university, at least not in kind of traditional finance. So, just kind of curious, like, how did you come to this approach? I mean, why principles, right? I mean, most of us just kind of go down this singular kind of path that we're taught on, but you have a very different kind of approach. Just you know, why principles? How do they help you, and how do you come to this kind of systems approach?
Yeah, so my objective pretty early on, especially when I went out deliberately to educate myself, was pretty much figure out how the world works, especially with relation to markets. For some ridiculous reason, I had it in my head that I wanted to answer that question in a way that was liquidity unconstrained. I don't even know to this day how that got in my head, but what that basically meant is that could I understand the world and markets enough in a way such that it didn't matter whether I was running $1 million or $1 trillion or multiple trillions, which is ridiculous, that I could still navigate and understand markets and operate, et cetera, et cetera. And that meant that was actually a really interesting discipline, because all of a sudden it skewed me a little bit away from like normal trading type stuff. But I really had to deeply understand how this world works. Because if you had to deploy assets, and it took a long time to do so because you had a lot of stuff, you really had to have confidence, because there's no easy outs at those sorts of sizes.
Right.
Now, like I say, I don't know why I had that in my head, but that
I mean,
was a bit of a,
clearly you just wanted to start with like the really easy questions of the world, right? Figure out how
yeah,
the world works and not worry about liquidity. I mean, those are the two easiest things in investing, right? You just start
yeah,
off. Yeah, those are
it's
very hard.
ridiculous, but it was a good discipline, right? It actually was invaluable, because it drove me to have to understand things at a much more deeper level than
Mm,
I ever had to, or I would have had to otherwise. And the
yeah.
second question was, how could I walk into any business and grow it, right? And then I
Sure.
realized there's one thing growing a business, sustaining the growth can be a very different dynamic as well. And so I was running down rabbit holes everywhere. Now, where did the principles focused and systems thing sort of come from? While I was sort of out of high school and into uni, I was starting to be really surprised. I'd see these quotes or excerpts of different people saying things from many years ago, even centuries ago. And I'm like, man, there's more. I understand more about particular aspects. Like there's more insight in these out of context quotes than there than what I'm finding in a full on, university level degree program,
Right.
in economics and all of this. And I started to realize there's an old quote by I think it's Dixon Watts, an old speculator from very long ago, but he basically says, learn principles and facts will fall into their right relations, right?
Oh yeah, that's a
And
great quote.
yeah, I really found that. And there's a whole series of other sort of, principles like that. And if you find and really get to a common sense sort of first principles level of how something works, or what that cutting insight is that unlocks that field, um, it's so much more valuable than, uh, what I was getting in the textbooks, back then. And so I was starting to develop this appreciation. And when I'd read all of these people who'd been successful in different fields, half the time I'd find that they'd take some very common sense sort of principles very seriously. And, they weren't getting hung up on all of these crazy, like the physics envy of economics and all the weird stuff that we were learning about. But then in the systems thinking side of things, I was also learning about, so I went pretty headlong into complex systems sort of theory and analysis, and
Mhm.
the whole works. And in that process, I came across several different books and thinkers and things. One of them being a guy an Israeli physicist by the name of Eli Goldratt.
Mhm.
And I keep rabbiting on about this with people, but I'll say it again, like the goal, and it's not luck, as an introduction into some of his body of knowledge. Now, he was a physicist, and he started to apply that sort of understanding and thinking structure and approach, problem solving sort of philosophy and approaches into the social sciences, but like applying it to businesses, analyzing a business as a complex system in order to improve its performance or to solve whatever problems, remove the impediments to growth, et cetera, and simultaneous to that, learning about complex adaptive systems and chaotic environments as well, and the concept of emergence and all of these different things, which are actually quite different to, say, the Eli Goldratt approach to systems thinking and problem solving and all of this. And so I just went really deep into all of that and how that all applies. And also, one of the things that was probably most responsible for my education was a saying by Einstein, where he says, if you can't explain something simply enough, you don't understand it well enough.
I love that quote.
And
Yeah.
so, yeah, that I love and hate that quote, because like it's a really good discipline. Like if you can't pick the subject or the issue or whatever to someone in a fairly simple, common sense sort of first principles way, then you don't understand it well enough. You've got to go back to the drawing board, and so that was a huge rod for my back for many, many years.
Yeah, there's like three things that you said there that really stood out for me. And like two of them like relate to Twitter that are so interesting. The first one is, all the sort of, I'll call it ancient wisdom, but right, the proverbs, right? Like they are proverbs, and I'll just use that term very loosely for a reason, because they have a huge amount of explanatory power, right? And they pack it, in such a tight little punch. And that is the real power in my view. And this is kind of going off of some of the Ayn Rand's epistemology here, is just the power of concepts and well-formed concepts, right? And those were like the early days of Twitter, right? You send out kind of your favorite quotes, and and the second thing is just the ability to condense knowledge down eloquently. Let's even say like 140 characters or 280, whatever Twitter's at today. It's such a skill, but it really displays kind of that you have to have mastery over the concept in order to really explain things very simply. And you see like the geniuses throughout history really get criticized for making things too simple. In a sense, it's like, no, it's not too simple. It's that you just don't, there's just so much wisdom there that they're able to kind of condense things down.
Well, one of the inherent dynamics of the systems thinking sort of approach is that what you're looking for is not to simplify to just catch all of this stuff. What you're looking for are these core root drivers of concepts or phenomena or behavior or dynamics. And if you've really got the core driver of something accurately defined, and normally in a mature system, there'll only be one or two core elements that then give rise to all of these other sort of almost symptoms.
Right.
And so one of the things you learn pretty quick, and if there isn't one or two of these core root drivers, that system isn't actually mature enough, and it typically won't survive out there in the natural world and all of this sort of thing. Typically what you find is that you can survey, say it's about 15-ish key characteristics or symptoms of any given system, especially in the social sort of systems world, like a business or a production line or an economy, quite frankly. You get the 15 sort of most prominent characteristics or symptoms of that system. That's enough to start being able to deductively work back down to identify the core underlying drivers that are the expression or expressing themselves out into that expression of symptoms, so to speak. And so you start to look at the world as a sort of symptomology of these core underlying dynamics and drivers in the world. And it's usually feedback loops that underpin these broader sort of developments and trending type dynamics. And so what happens is that everything that happens in the world as it unfolds, like most events and most everything, is just a symptomology, right, of these core dynamics or core phenomena. And so, which is a really useful framework when you're from an investment perspective, because all of a sudden, like if some random event happens, the majority of it all can be reconciled really coherently into these core dynamics. And if something pops up that is sort of left field or really unexpected or can't be explained back into that, that's actually signal to go and dig into that, right? Either you misunderstand the signal and how the system and how it's operating at the moment, or it's evolved, or that system construct that's reinforcing is starting to break down and transition into a new construct or a new regime or whatever. And so it helps you basically get rid of all the noise, because most things that happen, there's a lot of actually old sayings, but surprises tend to happen in the direction of the underlying trend, right?
Right.
Whether it's
Right.
war or events or all of this sort of stuff.
You just couldn't see
because
it.
it's just the symptomology. And
Right,
like you were
right.
mentioning before, there are actually tests of truth, right?
Okay.
And on a back of the envelope sort of way, there's like coherency. So it's almost like taking that law of non-contradiction in this world very, very seriously. And a mark of, or an element or marker of truth tends to be coherency. So it all reconciles in really well with each other. There's no contradiction. Experiential relevance, so you can actually map through and see how this applies in a common sense sort of way. And explanatory power, so that insight or that core understanding that then explains and unlocks either the performance of a system or the impediments or all of these sorts of dynamics. So it's like there's all of these core concepts. Now, I don't normally talk about any of this very often, because when you start to look at the world or try to explain the world as a complex system, it's not easy to do. I started in my research like 12, 15 years ago when I started sort of publishing stuff in the context back then. I had these big spaghetti map diagrams trying to map out these systems, and it'd just blow people's minds. I loved it. And there's a few people that actually enjoyed this stuff, because trying to identify these core dynamics, but it's just not well suited to written form, which tends to be a little bit linear in nature. And even in talking about this stuff, there's a linear flow, but we're trying to
shoehorn it down.
It's fun. Yeah. And so the tools that they've developed in like systems analysis and all of this is they're little on the intense side. And you start to get a glimpse into some of them, like with those Goldratt books, and a gentleman by the name of William Detmer sort of then wrote the textbooks and sort of the Bible, and has done a lot of training on that sort of stuff as well. And even there, you've got to balance their approach to systems analysis and problem solving with concepts of emergence and how systems actually function and evolve and adapt through different regimes, and to make it even more interesting, I think. And it sounds frustrating at first, but it's actually a huge direction to a solution. Like my father's an engineer, and so if he has the luxury of like electrons not thinking, for example,
right?
So 1 + 1 always equals 2, and he can go and design bridges or pressure vessels and heat exchangers in his case, and it's predictable. He can create solutions. For us, a complex system with thinking participants in it, totally different ballgame, right?
Yeah.
There's this behavioral phenomenon. There's a complexity and adaptability in that, which is off the charts, clearly. But the key direction to a solution is that the common denominator in everything is people, is human, is psychology, behavior.
Right. That's
Understand the common denominator, and this applies in all facets, because like we talked about, I started at how do you walk into a business and grow it or sustain that growth, and I'd look at my father, for example, who's an engineer, and like any really good engineer or scientist or programmer or whatever, like they're typically some of the smartest people in any given room they walk into, right?
For sure.
I don't know anything about engineering, yet if I'm running a company or a business, how do I deal with this fact that I have, these people with all of this expertise and domain, and I haven't got a clue what they're going on about, or whether, but the path to a solution there is the psychology and the behavior side of things. So can you tell when they're full of it, or when they're actually spot on, or And so it's more about reading people and the behavior and learning how to understand how that all fits in, to know who you should be paying attention to, on what topic, on what recommendation, are they biased, how's the behavioral dynamics unfolding. That's a direction to a solution in a business setting, is exactly the same in the world with markets.
Right.
You study and you analyze, you go deep into the common denominator, which is people and their behavior. And there's a key there to unlock a lot of this complexity and to give you then practical tools to navigate and make decisions within all of that.
I mean, that is fascinating. There's so much I want to say right now, so I'll try and keep it dense. Like, there are a couple of things that you said that just really, well, I'll throw one thing out there, and then I'll go on a different tangent. But the key ingredient to this thinking, right? Oh, this approach is you mentioned it very early and you glossed over it, but to me it's the most important thing. You talked about the integrity, taking the ideas seriously, right? And this is something that I can relate to a lot, where I take ideas very seriously, right? Like, if you tell me that, let me pick something like supremely controversial, right? Like, if you tell me that, like, if you tell me that, like, authoritarianism is bad, for example, right? Like, I'm going to take that seriously. Like, okay, like, find me, like, then, like, let's see, and let's apply then in every instance. I don't want to have except cases, right? And this goes back to the law of non-contradiction, which I think I could throw out for this audience because it is pretty philosophically minded. Like, it has to be, in order for something to be true, it has to apply 100% of the time, right? We cannot have we cannot have any exceptions. So that's really interesting. I think that's where a lot of people get in trouble investing. And I'm going to pick on value investors.
Yeah, I mean, there's a complexity behind that.
Yeah, totally. Yeah,
especially in the way you've just defined that. But
yeah.
There's a coherency. And so I find the same principles that are true in analyzing societies, they apply in businesses or in small organizations. They apply in family units, in your marriage. Like, it's the same, like, there's a coherency, to.
Yeah, and the way how I'm almost thinking about it, to make the physics analogy is, right, physics, right? Let's just say the building blocks of physics, and let's assume is like an atom, right, or an electron, right? They don't have atoms. How atoms move, there's no such thing as free will, right? It is moving according to its nature, right? When you think about the economy, and to bring this back to investing, right, the building blocks, or the fundamental building blocks of investing, are people, right? But people aren't deterministic in a way. They have a free will. And what guides them, like what drives human behavior? It's psychology, right? So, our psychology and philosophy are, in a different sense, are actually what drive human behavior. So in a very, like, deep sense, like, humans sit at the epicenter, or maybe the base of investing. So it's very astute to sort of study, how you study, people, in order to kind of build your investment framework.
Yeah, so you can see now, like, when I read George Soros's book, The Alchemy of Finance, he basically describes this in a slightly different way, where it's like, thinking participants, we can observe, so a fact or an event will happen, we will observe that, and then we will process that and make a decision or change our action on the basis of that observation of that fact. And then in the process of acting, we then change the facts, which then, there's this mind-blowing sort of feedback loops that or the reflexive dynamics that he talks about. So when I read his book, I'm like, man, this guy's really a systems thinker. Like, and totally, he gets this behavioral underpinning, and, he doesn't necessarily describe it in these ways, but that's sort of like a practical a practical example, or at least in a shorter term trading context. So not so much investing, but of applied short-term focused systems and like systems thinking and behavioral analysis.
Yeah.
And so when I saw that, I'm like, man, this is just everywhere, and then when I read old guys, like, because obviously we throw around terms like complex adaptive systems type
Right.
stuff. That wasn't necessarily articulated in that way. People would intuitively understand the concept of a living, interconnected, interdependent system.
Right.
But I'd start seeing this everywhere. I'm like, okay, so there's obviously a lot in this, and with George Soros in particular, he's pretty successful in that trading field, to
Totally.
say the least. And so when I kept seeing this preponderance of, people that were really capable in all sorts of fields of endeavor, successfully either building businesses or anticipating the future in whatever context, or, running, investors, traders, I'm starting to see these core elements that keep shining through all
Commonality
over the
there.
place, not that they necessarily articulate it in the same way.
In that way, yeah, they're implicitly operating on this kind of systems framework as opposed to like a very deductive application of linear concepts in a way that may or may not have any fidelity in real life. So I guess like when you think about investing, like do you have like some kind of like core principles that guide your investing?
Oh yeah, well, that's relative to the mandates that I have, right?
Okay.
So you give me the mandate, the investment mandate, and then I'll
Okay.
basically engineer a solution to be able to deliver on that. And
Gotcha.
so
I mean,
the great paradox, though, with what I do, especially with the mandates that I manage, which are more conservative quite conservative in nature, and focus on sort of resiliency dynamics, irrespective of what happens in the world. So all of this rocket science type deep inquiry into how everything works, it kind of, the irony is that the way I run these portfolios is just immensely simple, and I can kind of explain it really quickly. And it's just not rocket science, basically. And so of 100% of the returns that are generated, given the mandate and objective sort of parameters that we have for these conservative portfolios, which are absolute return in nature, they try to produce at minimum a positive return over any rolling 24-month period, irrespective of what happens in the world. They're seeking to be uncorrelated to pretty much anything out there, right? And
small tasks again.
Yeah, and compounds. So the targeted headline sort of return objective is compounded returns. So inflation plus 3 to 5% per annum. So a real return objective compounded on average over, multi-year time horizons. So that's the mandate that we run to. And so the way so of 100% of the results, you can probably attribute 2/3 of those results to two simple principles and observations, right? Number one, nearly every market, macro level market and currency and all the rest of it, it all maps to one of, or a combination of three things, right? Growth, inflation, and capital flows.
Gotcha.
Right. So growth increasing, decreasing, inflation increasing, decreasing, capital flows concentrating in or dispersing out. And
Gotcha.
so pretty much every asset class that matters maps to those three things. Right. And so what we do is we just start with that starting point, and we have an answer for every one of those different scenarios. Growth increasing, decreasing, inflation increase,
Right.
So
right.
we have an asset class or an investment exposure in the portfolio, and this is the building block, the starting point. So if growth is increasing, we have something that's doing well. If it's decreasing, then there's something in there that's answering to that. Same with inflation and capital flows. And that's our diversification starting point. Now that will help us maintain purchasing power, roughly speaking. Obviously, there's a little bit more to the story, but that's basically the guts of it. That gives us a foundation for uncorrelation, like not being correlated to like the share market or whatever it is out there. And that gives us a resiliency expectation as well, right? Irrespective of what happens, because any new development in the world or in conditions is just a rearranging of those three things.
Right.
It's like, oh, we go into recession, that's growth down. Probably in this regime, that's still deflationary or disinflationary. And then you just got to determine what it is you're looking at as to whether capital will concentrate in or out of that region or area of the system.
Yeah,
And
I
so
would say that's
basically,
great because, oh, sorry, go ahead. Yeah. I don't want to
yeah,
interrupt.
but
Go
that
ahead.
gives you a positive expectation of being resilient, irrespective of what happens, right?
Of what happens out there. And you've basically just reduced, an to use the term, a crow busting, just an immense amount of decisions, and you distill them down to basically, six, or, whatever the
That's right.
combination, math is,
I
right?
can explain this to my
I could,
auntie, and she's untrained and unexperienced in any of this. She goes like, "Oh yeah, that makes
oh,
sense."
that makes a
And
lot of
I can
sense.
explain this to someone like yourself, who's like a hell of a lot more experience and sophistication. You'd be like, "Oh yeah, that makes sense." So
Yeah. And that's how you
you
know
know,
it's true, right?
well,
That goes back to
that's
Einstein
how
and
you know
stuff.
you're heading in roughly the right direction. Like I keep saying to
Yeah.
people, we don't have a perfect solution, but I like to think or pretend that we're on that list of least bad solutions out there. You know.
Bad solutions. Yeah. It's a fascinating approach. And, anyone who knows me would know. And even like I'm a fan of philosophy because, in a sense, I wanted to answer the question, why do I think, like, what is the operating system in my brain working on, right? Like, I'm making decisions based on something. Like, when I want to know, like, what that operating system is, and how, there's a parallel to why I started blogging, is like, all right, I've been an investor for X amount of years, but I seem to just be doing what I'm taught. Like, I was really acting on heuristics, and I was like, shouldn't I understand what is driving these decisions? And that's what kind of drove me down kind of into this path, and ultimately led me to blogging, and kind of led me to you. It's like, all right, like, what are the principles here that we're acting on, right? Because I'm going to pick on value investors, right? I mean, it's kind of like kick a dog when they're down, right? I mean, poor guys can't catch a break. But like, I remember reading Margin of Safety by Seth Klarman, and it's a concept. It's really like it's just like the light bulb went off, right? And for those who don't know what margin of safety is, it's basically you invest in a business at such a low valuation that it's hard to get hurt so long as the business is viable. Now, to me, that was like, that sounds incredible, right? Your downside protection, right? Because you're not going to lose too much, and you have all this optionality to the upside. And I just absolutely loved it. And then I started getting into the world of value investing, and when I'm picking on value investors, there is like everyone is not everyone. A lot of people in the value investing world are acting on these heuristics, right? Like, buy cheap stocks, right? And they may not quite understand what that means, or there's different opinions for what that means, but you could see that there's just, that is the sort of mantra, and they're sticking to it in a sense, without saying, like, this hasn't worked for 10 years. Maybe the mantra is wrong, right? It's like the world is broken, not the mantra, as opposed to the mantra being broken, not the world, right? So there's this, and that's why, when you mentioned before, the integrity, to the,
Well,
that sort of integrity to the taking ideas seriously, is really, and that's why I sort of have shied away from value investing and found my own
well,
kind of path, right?
it's
Because
funny you bring that up, because that was a pretty big realization early on in my journey of things. And what I mean by that is, obviously, I started diving into all sorts of stuff. And on that list, you have to spend some, actually in finance, we did a lot of this anyway, at uni. It was a pretty intense introduction, but basically what we would call value investing. So, securities pricing and valuation, and going deep into all of that. But when I sat back and look at the systems logic of all of this, because valuation is a mean reversion concept, right? And so, and when I was coming into things, like 20 years ago, into all of this sort of awareness and really starting to get committed to trying to figure out all of this stuff, I realized that over the last, so one of the preconditions to, say, Warren Buffett being successful is an inherent underpinning. So people may or may not realize just how much our economic system is predicated upon our legal system, right?
Oh yeah, for sure.
And the market mechanisms that are in play and all the rest of it. And so for the last 100 years, we've reasonably, especially from a US-centric sort of focus, we've had a reasonably intact sort of legal system predicated on a higher law sort of principle set, which basically enshrines with value human life, the integrity of contracts and property, right? And makes that all predictable and reliable and enforceable, et cetera, et cetera. And that sort of allows us to construct basically a market mechanism type system upon that, which enables resource allocation and the miracle of markets to actually function, getting, et cetera, and wealth to be created,
Totally.
blah, blah, blah. Yeah, an increasing abundance of goods and services, which is an increasing living standards and all the rest of it. Now, the last 50 years, especially, which were kind of really the forefront of Buffett style investing, and not so much recently, but for good reason, all of that was intact. So we had these growth tailwinds. And on top of it, we also had both in the US and around the world, a multi-decade credit cycle like you've never seen in history.
That's
basically. And so we've got two huge tailwinds. That system of market mechanisms basically having integrity and functioning, right? Mm-hmm. Which allowed for the mean reversion dynamics to play themselves out over time. And that positive tailwind to an increasing abundance of goods and services that are useful, that are increased living standards, productivity trends with, the peace that comes with all of that gives birth or gives rise for innovation to happen, the incentives, especially around small and medium-sized business, which really are at the core of innovation in any given society, blah, blah, blah. And so productivity trends, all of those things, we had tailwinds, and then supercharged by a multi-decade, half a century long credit cycle, right? Where we just progressively, and the development of the Eurodollar system globally as well, which is really turbocharging that credit cycle, especially in the last 30 years, especially.
Yeah, just for really viewers. Yeah, no, just for you, as the Eurodollar system is, I've referred to it in the past as a shadow banking system. I've talked about that in some of the in some of the Bitcoin episodes, so I would go back and kind of reference that. But I didn't mean to interrupt, Daniel. Just make sure everyone, everyone knows what you're talking about. Yeah,
tailwinds everywhere, and a reasonably stable, cooperative, roughly speaking, over time, global geopolitical environment, right?
Yeah.
It's sort of the post-World War II period onwards,
yeah.
yes. And then the coming together and the integration of trade and globalization, et cetera, as well. So we got tailwinds everywhere for the last 70, 80 years, especially to a mean reversion. So anytime you go below trend, you just buy that and you've got all of these tailwinds in aggregate that are going to really help that mean reversion dynamic. Problem is that system structure for the last 70 years is breaking down and transitioning, right? And that's so fair. We're starting to white ant that rule of law, higher law principle underpinnings that we've had, where our policy settings for the last 2 decades especially have been more and more aggressively suspending market mechanisms from being able to clear out unsustainabilities and reallocate resources to more useful uses, et cetera, et cetera. There's so many different factors. And then geopolitically, globally, that global order, that rules-based system is breaking down and transitioning. Everything's becoming not so much cooperative, but competitive, right? And we've got relationships that are increasingly fraying because all of these different regions of the world, because of all of the credit bubbles and that different excesses, depending on what part of the world we're talking about, they're unsustainable, right? And that's all coming home to roost. And so we've kind of got that old system and regime tearing itself apart. We no longer have those tailwinds, like that escalating credit bubble I mean, they're still trying to keep that going, and in
Yeah.
different effects, it still is going, but the systems are so saturated with debt that every new dollar of credit or liquidity or money that's created is translating into less and less productive activity.
Yeah.
It's that, you know, anyway, we're touching a lot of things here, but the tailwinds are
Yeah.
just not there anywhere. And so 20 years ago, even 15 years ago, especially, I'd look around the world and go, wow, this is like the mother of all credit cycles, throughout history, because you've never seen something on such a globalized basis that's unfolding. Yeah, it's good to learn the Buffett style philosophy and how to value a company or an asset, et cetera, et cetera. You've kind of just got to go through that process in developing your skill set as an investor or as a business person or whatever in allocating capital. But the world we're living in, or the world I'm going to be growing up into and dealing with, is going to be more the aftermath of one of the biggest credit cycles in history, and also a world that is a little bit more competitive at a geopolitical level. And to top it all off, the legal systems that have been in play and intact, especially the last 100 years in most of the major developed world nations that kind of matter in an investment point of view, they're being corroded and white-anted. Like the very foundations that made us successful as societies and increased our standards of living are being white-anted massively. That higher law, like, for example, one way to illustrate this is that the integrity of a contract, for example. So I'll use two extremes. Like once upon, like 50 years ago, 30 years ago, 20 years ago in the US, if you entered into a contract, so even with a 30-year time horizon, you're pretty confident that that's going to be honored and it's predictable, it's enforceable. The legal environment 30 years from now is going to be somewhat predictable, and you can enter into long-term agreements. You can, without trust, nothing grows in society, right?
Yeah. I mean,
And
I
that's
could
a
just
form of
even,
institutionalized trust and
yeah,
a key pillar.
sorry to interrupt. I was just thinking like there is a real concrete case there of the trust of like the legal system, right? We could look at, GM's bankruptcy in 2000 and 2008 here in the US. The administration here completely ignored and just ignored bankruptcy law, right? And that's one of the first times I think.
Yeah, so the
Definitely
moral hazard that's come in all areas is just really getting
Yeah.
ridiculous. But
Yeah.
back to what I was saying, like the 30-year time horizon of trust, let's
Yeah.
oversimplify it to that in the US, compared to, say, China today. You go and enter into a contract in China,
Right.
right?
Good point.
What's your time horizon of confidence?
Right. And how would that have
Probably
changed?
measured in years, single digit years, right? Because you think 5-10 years from now, like the rule of law there is predicated on agenda, right? It's going to change with
100%.
the shifting sands. It's not, it's not conducive to long-term
That's right.
planning, contracting, etc. And that impedes capital formation. There's so many issues that come with that. And so even in the US, to bring it forward to today, we've got a collapsing time horizon of confidence, right? Even in the very integrity and enforceability of contract, because we don't know what used to be a 40-50 year time horizon of contract integrity in the US or confidence around that is now collapsing. I'd argue, I mean, you can't objectively, that time horizon is collapsing, right? We don't know the political, legal environment we're going to be in 10 years from now. For all intents and purposes, it seems like we're heading in a direction that's only going to shorten that confidence time horizon in the US. And so that's huge in terms of pulling the underpinnings from, capital formation, trust, investment, how you allocate capital, whether you even take risk in certain contexts to be able to continue this productivity tailwind. Like economics really is built upon our legal system and the political environment and the geopolitical environment. And that's all kind of, the time horizons are collapsing everywhere around the world. Everything's becoming more agenda driven rather than higher law, higher principle driven. et cetera, et cetera. And so I started to realize this, and I'm like, well, having the Warren Buffett skill set is good, probably still will be useful to have, but at that bigger picture level, what I need to do is to be getting better at profiling behavior and basically capital flows. Like, where is the money actually going and why? Because in a world where market mechanisms are increasingly being disengaged by policy, so those natural rebalancing mechanisms that markets provide are not necessarily going to be there. And so that's going to make mean reversion strategies, especially like long-term value, a little bit more problematic or hit or miss. And when you think about it, capital flows are primary, like capital concentrating into an asset or an asset class, and the valuation is just the secondary effect of that. If capital is still concentrating into that asset, its valuation is just going to go from high and overvalued to ridiculous to stupid. And that'll keep happening until capital flows reverse and start to exit. You know what I mean? Or on the flip side, value trap, all the value trap is that there's capital dispersion away from that asset. And there's no willingness or propensity for that capital to come back in and concentrate there. And so it's cheap, and it could still get even cheaper and remain cheap for a bloody long time. And because we're disengaging market mechanisms, the whole value framework, it's still useful, but it becomes highly problematic. And what we have is a system where we got more disorientated people, disorientated capital, because the market mechanisms that used to provide signal, that used to have integrity and guide our actions and decisions and allocation, are being corrupted or suspended. And so it's better then to follow the money flow and look for the hallmarks of conditions of extreme behaviors, or when behavior starts to shift and money starts to change. And so I sort of realized, and also that geopolitical, like, you might remember, maybe not, I don't know, but like 10, 20 years ago, all of the investment elite, right, in the world, and macro elite and all of this, like all the leaders in those fields intellectually, they were basically of the view, many still are to a degree, but they, reality is sort of waking them up, that geopolitical factors didn't matter.
Right.
Geopolitics was dead,
Right.
And whereas I'm sitting back going, well, on the tail end, or trying to deal with these issues of over indebtedness and all the imbalances and unsustainabilities in the world, geopolitics is probably going to matter a hell of a lot when I come into, my career is in the investment and business side of things. And so that perception is starting to shift quite a bit now, and everyone's starting to realize, actually, the geopolitical dynamics, these questions of power and how it moves and then expresses itself through legal systems and then economics and capital and trade flows, man, that's half the game. That's starting to become incredibly important, and it appears like it's going to continue to become even more important. And so sort of realizing all of that, I'm like, wow, I can't get stuck on this valuation-based paradigm, because what I need is something that can take account of the way the system is adapting,
Yeah, I mean, there's so much there that I can go on, because, right, it's but by the way, you like how I smoothly switched over to my wired headphones because my
Very
AirPods
nice.
died. That's how long this conversation is. It feels like 10 minutes. But yeah, it's interesting to put it as a regime switch, right? And valuation was a framework for a different kind of regime. In other words, it's not the primary motivating factor, right? It's not universal. It doesn't apply to all regimes.
It used to be a shortcut, a really useful
exactly
shortcut.
It was a heuristic.
But the context has changed, so
Exactly.
change the context, change the meaning to anything, right?
That's right.
And so now the context has shifted. Now we could get back there and valuation becomes a useful sort of shortcut to things.
Right.
I don't think we're going to see it anytime soon.
I suspect not either.
But who knows?
Yeah, but it's what is so that's what got me down. It's funny, that's what brought me down kind of the path that I'm currently on. It's all right, well, valuation doesn't right, isn't primary, right? So what is, right? Like, what are the things that I need to be figuring out as an investor, and that are the important things. And I've written upon this a little in the past, and some of my articles, and you've touched upon it. This is where I see capital flows as really, and actually even more fundamentally, human behavior as the most fundamental investing building blocks, right? It's not really anything that people talk about. I mean, people obviously talk about, there are people who do talk about it, but talking about taking investor behavior seriously, and the allocation of capital and capital flows seriously as the investment
Well,
the investment kind of decision is not really, it's not really, you know, I don't see too many people doing it other than
there's
you,
good
to be
reason for
honest.
that, because you can't just pull up a data set on Bloomberg that
Yes.
says, oh, capital flows into the US.
Yeah, I've
Like,
tried. Doesn't work.
yeah. And when you really study the banking and the currency systems in the world, you start to realize that, man, money, credit, liquidity, capital, whatever, like it can be created in a variety of different ways. Like
Right.
one of the biggest misconceptions is that central banks are, well, they're just not as material in money and liquidity creation, at least in the current regime, as everyone gives them credit for.
Right.
Money, liquidity, capital, the whole works are created in ways that are way beyond the purview of central banks. It's great. And so
Yeah.
defining capital flows and even money flows in different directions, especially with markets, is our analytic sort of focus or target. It's actually very hard, and so I've spent the last 12, 15 years trying to reduce these abstract concepts and ideas that make sense at a common sense level and throughout history, and you can see the effects down into data driven, objective ways of defining all of this. So I can see the material elements of capital flows moving into and out of particular regions, or the way money is moving, and different participant categories are moving money into or out of a particular asset, or how they're positioned, or where critical mass conditions are starting to develop in the underlying liquidity conditions of the market, or whatever. Like, so trying to reduce abstract ideas down into data driven models, because if it's data driven and it's objective, out of my head.
Right.
When conditions change, you see it in the data, and then you're forced to change, right? You can
Right.
be more objective about it, more timely, and also you can get deeper insight into the pricing structures of any given market out there. And it's not easy to do. It's taken me like 15 years of trying to figure this out. And there's no way I would have been able to develop any of the solutions that I have developed in how you measure and map all of this stuff, had I not had that systems thinking sort of underpinnings and training, which comes back to like those Goldratt books giving you an introduction of literally how to think. And William Detmer, he became a mentor, um, fortunately, and a really good friend. And man, like, so going really deep into how to define, understand, map a system, or solve complex problems, or surface. So one of the systems thinking is particularly around the Goldratt, William Detmer sort of approach to things, is taking that law of non-contradiction very seriously, but they have systematic ways to create breakthrough solutions, which really are just come down to, oh, that looks like a contradiction, or is a contradiction to everyone else, or a compromise. Can't have this, that, and vice versa.
Yeah.
But you
Yeah.
just distill it back to a core assumption that is wrong, right? Or inaccurate, or poorly defined. And you change that assumption, and you usually unlock that compromise,
Right.
right? So
Yeah.
a
You expose it. Yeah.
compromise situation is always a red flag to, this is ultimately not good. It's not sustainable. It's not, it's going to end up win lose, or lose lose. Sorry,
Loose.
even if you think it's, compromises don't need to exist in reality, right? And this
Right.
applies in relationships, in businesses, in the world, And that systems, under Bill Detmer and things, you sort of learn how to systematically surface and obliterate those faulty assumptions and understandings of reality or of that system to obliterate that compromise. So you get the best of both worlds, right?
That's right.
And create breakthrough solutions or unlock performance or whatever. And then the understanding of like emergent phenomena and the way systems adapt and within chaotic or complex environments, so important, because half of the things that I stumbled into, exploring data and trying to reduce these concepts into practical data set, there's so much counterintuitive stuff in there. It's ridiculous, like in paradox.
Yeah, it's like you look for, it's like you look for the contradictions in order to find new truth, in a sense, because you have the law of non-contradiction, right? Contradictions don't exist in reality, right? It's a very philosophical statement that is very deep. This is one of these like tweets, right? Contradictions don't exist in reality. People tweet it out, but how many people take that seriously, right? And like I try and do this. I'm not saying I'm great at it. It's just something I try and do, is look for the contradictions in my own life, my own psychology, and those are, it can be terrifying at first, because now you're questioning things that you've never questioned, and that's why that's why it flags them. But if you go and you do the work to understand them, it leads to so much. The payoff is so, the juice is just worth the squeeze like 1,000 times over, right? The payoff
so
is
there's
so big.
three things you want to look for. The whole contradiction compromise thing is one.
Okay.
The other one is anomalies.
Right.
In the system and the pattern of what's going on. It's like, the
Right,
anomaly. And the third thing is gray areas that people deliberately avoid, right? Which are normally related to these other two anyway.
Absolutely.
Right?
Yeah. And investing is so pregnant and like rife with this stuff, right?
Yeah. So if you use those three things is like your focusing lens on what do I dive into, it's going to be so rich on the other side of all of that. And because in a system as well, you've got this, it's like the fallacy of composition type issues, or this concept of emergence, where you can get the individual parts or people that are totally different, right? You can get a group of people, say 100 of them, they're all so unique and different in themselves, but you put them all together and their functional behavior in that circumstance can be one surprisingly cohesive and unified, but of a fundamentally different nature to the independent component parts.
It's like diversification in investing, or insurance.
Yeah, and so you get these like emergent phenomena type dynamics where the behavior of the collective can be very different, paradoxically different to the what would be implied by just analyzing the parts. Right. And this comes up so much, especially when I analyze and reduce down into data sets, banking system phenomena, participant sort of behaviors and flows, and so without that system sort of underpinning and paradigm, you're just not going to be able to handle any of this. And so if you're like my professors were back in the days of economics at university, where they see the world as a machine, and they are literally making assumptions that kind of remove the behavioral element really, and the people dimension, trying to swap them out for, non-thinking components of the machine.
Assume rational economic actor, right? Which means
nothing. Like a whole bunch of funny stuff. But you see the disconnects here.
Absolutely. Absolutely. Daniel, this has been an incredible conversation. I mean, it's so philosophically pregnant. I mean, there's so much that I like. Each 5 minutes is like another hour unto itself of just diving into topics, and like,
this is a lot of learning the hard way.
Yeah, I mean, I hope everyone is enjoying this conversation. Daniel, I want to be respectful of your time, because I could keep you here all day. I kind of have a shortcut. I got, the green screen's going to mess it up, but I have one of the books that you recommended here, William Detmer's book. I'm very excited to read it. Thank you so much for joining us. Like everyone, like I cannot I cannot recommend Daniel's stuff enough. Like, he's just, as a thinker, I find kind of one of the most fascinating people in the investment world. Kind of how he approaches problems is so different and unique, that I totally gravitate to it. Thanks a lot for joining us. Daniel is, where can people follow you? Follow your work. Any last
Um,
words?
Best to just jump on the website, which is prerequisite.com.au. There's heaps of like training videos, there's quarterly letters, there's research, there's all sorts of stuff there.
This stuff is absolutely great. I mean, the training videos kind of sneakily came on, or stealthily came on. I've been watching those, and they are incredible. Like, I really enjoy them. You guys did a great job there. With that, I want to thank you for joining us. If there's anyone on the super chat, thank you so much for using the super chat. Again, we will try and get back to you with some your questions answered. Really appreciate it. Daniel, thank you so much. I had absolute blast. I mean, the sun, is the sun even up where you are? Daniel's joining us from Australia.
It's coming up. That's right.
Yeah. In case you couldn't tell from his French accent, he's in Australia. So he is graciously joined us in the wee early morning there. So, well, thank you everyone again. Thanks, Daniel. This was awesome. I hope everyone enjoyed it. And until next time, take care.
Nice talking. Bye.